Good evening, ladies and gentlemen. Welcome to Chicago Booth's Virtual Economic Outlook 2021. My name is Madhav Rajan. I'm the Dean and the George Schultz Professor of Accounting at the University of Chicago's Booth School of Business. I hope all of you are doing well and taking care during this unusual time, and I'm truly grateful that you've taken the time to engage with us in this particular way. Chicago Booth has a long tradition of informing public disclosure through platforms such as our initiative on global markets and the Chicago Booth Review publication, and of course, Economic Outlook, which was started back in 1954. Economic Outlook provides a forum for our path-breaking thought leaders to confront the future, evaluate emerging trends, and share insights that help reframe our understanding of the world to come. We have an excellent program today and a great set of panelists whom I'll introduce in just a bit. But to summarize, we have Chicago Booth faculty Chang-Tai Hsieh and Randy Crossner, and Hong Kong faculty member and economist Richard Wong to share their insights on trade wars, the US election, and the economies of Asia. And we are thrilled to have Henny Sender of BlackRock Investment Institute coming back to EO to moderate today's panel. This is the second of three 2021 Economic Outlook events based out of each of our three global campuses. Last week, we had more than 4,000 viewers tune in to EO in Chicago to hear Booth faculty Austin Goolsbee, Raghuram Rajan, and Randy Crossner. And a recording of that event is available on our website at chicagobooth.edu. We will continue the Economic Outlook series on Tuesday, February the 2nd in London, again with Randy Crossner and with Veronica Guerrieri and Brent Neiman. A couple small things. After today's event in Hong Kong, our admissions team will host a brief Q&A session. So I invite you to please stay connected after EO to learn more about our booth programs. I want to also let you know about another great event coming up. The Booth School's Rustandi Center for Social Sector Innovation continues to gather faculty and leaders across the business and social sectors to reflect on what it takes to achieve meaningful change. And on February 16th, the Center's Innovating for Social Equity series will explore the role business plays in society with a focus on what public companies can do to tackle economic and racial inequalities. And details are on the Rustandi Center's website. So today we look forward to hearing what's on the minds of our fantastic set of panelists and discussants. So let me introduce them more fully. Chang-Tai Hsieh is the Phyllis and Irwin Winkle-Reed Professor of Economics and the PCL faculty scholar at Chicago Booth, where he conducts research on growth and development. Chang-Tai has been a visiting scholar at the Federal Reserve Banks in New York, Minneapolis, and San Francisco, as well as the World Bank's Development Economics Group and the Economic Planning Agency in Japan. Randy Crossner is the Deputy Dean for Executive Programs and the Norman Bobbins Professor of Economics at Booth. He was a governor of the Federal Reserve System from 2006 to 2009. Randy chaired the Committee on Supervision and Regulation of Banking Institutions and the Committee on Consumer and Community Affairs, and took a leading role in developing responses to the financial crisis, as well as initiatives to improve consumer protection and disclosure. And we also have Richard Wong, Provost and Deputy Vice Chancellor, Professor of Economics, and the Philip Wong Kennedy Wong Professor in Political Economy at the University of Hong Kong. Richard has been founding director of the Hong Kong Center for Economic Research since 1987 and the Hong Kong Institute for Economics and Business Strategy since 1999. His research focuses on the political economy of public policy and regional economic development in China. We're thrilled to have our moderator, Henny Sender, managing director and a senior advisor to the BlackRock Investment Institute. She advises the firm on opportunities in APAC and engages BlackRock's clients in the region, who include sovereign wealth funds, central banks and pension funds, and focuses on China, sustainability, and private markets. Henny was with the Financial Times for the past 13 years, spending time in New York and Hong Kong, and for 15 years prior to that was at the Wall Street Journal as a senior special writer in the money and investing section and the Far Eastern Economic Review. So I want to thank all of you again, and with that, let me hand it off to Henny.
Rajan, thank you so much. You forgot to mention that the best thing about the Booth School is the new Hong Kong campus, which is absolutely gorgeous. And I urge all of you to spend time in Hong Kong. I want to wish you all a happy new year. I don't know whether I'm being late for Western New Year or early for Lunar New Year. I'm going to start by giving you all a very brief roadmap. I'm going to start with Randy, and if all of you think there's at least 3 Randys, I share that belief because he is everywhere and one of the most impressive panelists that I ever get to deal with. And because in a few hours, the inauguration does get underway, and hopefully it comes off as peacefully as we all hope, I thought we would start out by talking about the US elections. And I wanted to start out by asking you, Randy, how you see the state of the US economy during this transition. And do you have a sense of the Biden economic policies? And do you think the right policies are in place both on the fiscal and monetary side? Over to you.
Great, thank you very much. I'm delighted to be back with all of you in Hong Kong and throughout Asia. I'm delighted to have the partnership with the Asia Financial Forum of the last few years. I think it's been very, very fruitful. Boy, there's a lot on President-elect Biden's plate, and soon to be President Biden, and a lot of challenges, a lot of changes, and also some continuity. So I think you mentioned monetary policy. Obviously, there'll be continuity there. The Fed took leaves out of the playbook from when I was there a long time ago. Well, maybe not that long ago, 10, 12 years ago, in response to the global financial crisis, and provided an enormous amount of liquidity to the markets, and continues to do so. Stood up the old lending programs that we had pioneered when I was there, plus a lot of new ones. So I think that's going to continue, and I think we're going to see a commitment to low interest rates for a very long time continue for a very long time. I really don't see the Fed changing their fundamental policy unless there's some major shock. It's going to be low interest rates, effectively zero interest rates, for a very long time. On the fiscal side, back in March and April, we saw roughly 15% of GDP, roughly $3 trillion, be spent. Just before the end of the year, we saw almost another $1 trillion being spent. So we're up to 20% of GDP in terms of fiscal policy. And that is a lot. That is something that is completely unprecedented outside of wartime, and even during war, that is an enormous amount. And so the debate right now seems to be about, well, how much more do we need? I think the focus really should be on fighting the virus, because if you want to save lives and save livelihoods, that's where you've got to go. An enormous amount of money has been spent in trying to provide support for households and for businesses. And in the midst of a crisis, of course, that seems like a reasonable response. Rather than trying to get to a particular number of 1.9 trillion or $2 trillion, I think it would be much better to say, let's try to fight what's causing the problem right now, because we've already spent 20% of GDP in less than a year. Let's try to get that under control, and then we can figure out where we need to do additional spending, rather than just say, we've just got to spend more now, and we'll do 1.9 billion of so-called stimulus, and then another package of longer-term investment kinds of things in infrastructure. I think we need to take a step back, and especially in thinking about longer-term investment, we need to understand the course of the pandemic and what that's going to mean for the economy. And I think that's going to mean permanent changes in the way people work, in thinking about public transportation, in thinking about private transportation, and in the hospitality sector. And so I think it would be wise to take a little bit of a step back, fight the virus first, and then move forward. But I think the administration, at least from what I can see, let's say looking at Janet Yellen's testimony, former Fed chair, and someone I'd worked with closely when she was at the San Francisco Fed and I was on the Federal Reserve Board, and I think soon to be the Secretary of Treasury, she said, go big. well, we've already gone big, and so we may need to go bigger. But let's figure out. Let's fight the disease. I think that really needs to be the priority. The public health needs to be the priority. That'll save lives, save livelihoods, and then move on to the next stages.
These policies will have enough multiplier effects. You know, it was funny. I was in the U.S. after Obama's $787 billion plan, you know, in the wake of the global financial crisis, and I went to Detroit for the first time, and I was trying to figure out where the money went. And it was like a half mile of widening of the highway to the airport. And everything went to civil service salaries. You know, should our policies be more focused rather than targeting households broadly? You know, should they be more focused, do you think?
I think definitely should be much more focused. I mean, this desire to give just you know, an additional $1,400 to $2,000 to every family or most families, I think it should be targeted on the families and households that are facing the greatest challenges rather than just sent more broadly. I think that will have relatively muted stimulus effect. We've already seen one round of that. The issue is getting the economy back more broadly. It is not an issue of trying to manage demand. People are scared of going out. People are scared of consuming. People are scared of going into the office. That's why it's got to be the number one priority to get the vaccine out, to try to deal with the public health issue, because that's the key stimulus package as far as I'm concerned. And this doesn't cost trillions of dollars to do this. This costs billions of dollars for sure. So it's not that there shouldn't be any expenditure, but the impact of spending billions of dollars on quickly fighting the virus is going to be much bigger than sending out those stimulus checks, and put the U.S. in a better position for then thinking about, well, what other longer term investments do we need to make?
You know, I'm always reading research reports from the investment banks, and they're all predicting a V-shaped recovery. At the same time, they're saying we need to keep zero rates for the next 4 or 5 years. Two questions. Is there a contradiction there? And have we become too dependent on zero interest rates? And will we see, the risks on the horizon is what happens when finally we see an exit from these policies, or do we never see an exit from these policies?
Well, I certainly want to bring my colleagues in on that. I think it is going to be a long time before there's an exit from low interest rates, and I think we will have this debt and deficit with us for a very, very long time. But I don't know. Maybe we should turn to Richard and Chang to see what their thoughts are on that.
Yes, and I'd like to ask you both if you can talk about what are the consequences of Fed-generated liquidity in Asia. I'm going to get my headphones because I'm told that my voice is cracking. So I'll be right back. I don't know whichever one wants to go first.
So I can go first. So there are just 2 points I'd like to add to what Randy said. One is that the U.S.'s debt to GDP ratio has already exceeded 100%. It's already exceeded 100% of GDP, and that's already 10 percentage points beyond the Reinhardt-Rogoff number beyond which countries land in permanent fiscal trouble. The other point, since we're starting to talk about Asia, is that China never undertook the fiscal spending that the U.S. did, and it did something else. I mean, it put so there was no there was essentially no cash rebates to consumers. there was, and I do think that if you look at what's happened to the Chinese economy, I mean, it does speak to exactly what Randy was saying, that it does look like the best rescue package is a package that fights the pandemic instead of shoving cash out the door.
Richard, do you have anything to add?
I think, yeah, I don't have anything particular to add to the pandemic because in my part of the world, the pandemic seems to be reasonably under control. It's still episodic changes, but then international travel is just not there. But I'd like to skip to something different, and that is one of the consequences of the U.S.-China trade wars is to have forced China, I think, to rethink its economic development strategy. One would look in the last 2 or 3 decades. What has happened is that China, but also the European Union, particularly Germany, have built up very serious current account surpluses. And this has, of course, the counterpart to that is the U.S. has a huge current account deficit as a consequence. And all those surpluses create huge demand for U.S. assets, right? Which has really created a rather unbalanced system. Now, I don't think the trade wars, the U.S.-China trade wars, is really going to address this issue. But because China certainly takes this very seriously, so it's basically opening up some very important avenue, and that is internal circulation. Basically, to put it simply, they would like to balance the economy, encourage household consumption, discourage savings. This will then contribute to a lowering, in the long run, a lowering of the current account surpluses that it runs. And it is doing this in part by encouraging financial liberalization, so that households can have better savings options than the thing they have at present. The present savings option for the household is that after 40 years of rapid growth, they have not had as much income growth compared to the companies. Right, and that is part of the unbalanced outcome. Now, with U.S.-China trade war, China has to find another way to generate demand because I think it's not just a U.S.-China trade war. It's just that basically globalization is probably a changing course, if not going onto a slower trajectory, whatever it is. So that's one response, and that might actually create better conditions, not only for the Chinese household going forward, a more sustainable long-term economic growth. You probably have to do things like deal with social security, pensions, investment for options for households. So basically, you have to have a more fruitful, rewarding savings option, and then in order you can encourage consumption. So that is one good development. The other thing is, well,
I'm gonna interrupt you there because I just want to go back for 1 minute. And before we get into the relationship or the lack of a relationship between China and the US, I just wanted to talk a minute about the Chinese economy itself. We have seen China survive 2 crises in a row now, far better than any other country on the planet. China emerged from the global financial crisis virtually unscathed. We've already, although we've seen a minor setback in recent weeks as far as COVID is concerned in China, if you look at their economic performance, they were the only country, major country in the world to have positive GDP growth for the entire year of 2020. So what are, do you think, the consequences of that? You know, the first thing you said was China is rethinking its development strategy. Dr. Hsieh, can you pick up on that? And you talk about what you see as the strengths of the Chinese economy and the vulnerability, picking up on what Dr. Wong said about rethinking its development strategy?
Yeah, sure. So there are 3 points I want to make. Well, one is that if you think about the unique strengths of the Chinese system, that it's about the control that the Communist Party has, and it's a system that I think is uniquely well suited to dealing with crises. And I think that's part of, if you think about what happened in 2008 and 2009, and if you look at what happened last year in terms of the response of the Chinese government to the crisis, it was basically taking out all of their, I'm just going to call it Maoist tools of control, of control, and it's something that it does well. What it doesn't do as well is when it doesn't depend on control, but when you need to depend on the initiative of individual people or individual companies that you may not have as much control over. So I hope that we have a chance to come back to that. The two additional points I wanted to make is that if I think about so if you look at the data, there already has been a significant amount of what I'm going to call rebalancing. China's current account surplus has fallen steadily over the last 12 years, with the exception of this past year. So by 2018, I don't know, it's not something that I think people have noticed, but in 2018, China's current account was in deficit. Before the pandemic, it already was in a deficit, and household consumption had gone up. This is something that reversed itself this current year. I also
yes, I think that's a great point. You know, if you looked at 2019, we all thought then that China would actually have a current account deficit in a world where COVID didn't exist, in part because there was massive spending as Chinese tourists discovered the joys of world travel, and we were all thinking that maybe China would go from being a capital exporter to a capital importer. So I think that's a great point.
Right. No, I think it was, and then Richard brought up the so-called dual circulation, and I hope we would just like I think that is something different. I think that is just part of the beginning of an ideological campaign, and my sense is that they're still trying to figure out what exactly it means so it's an ideological campaign to try to justify what they think they may want to do going forward, and this is all coming from I think a big part to the US-China trade war, which I don't think has a lot to do with the current account surplus, but and partly it has to do with the struggles that US businesses have in China. But I do think that it's mostly part of this change in US views about what the ultimate goals of the Chinese Communist Party are. Anyway, so I'll stop here. I'll let other people chime in.
So I'm going to turn to Randy and ask him a question, picking up on your point, Dr. Hsieh, when he said, in a crisis, China is well suited to deploy its Maoist tools of controls. Randy, do you think that China under Xi Jinping is turning the clock back?
And so, well, I think it's both going forward and going back, because I think exactly as Chang was talking about, they're thinking about deploying tools, some tools from the past, but in the context of a modern economy that has many capitalist elements in it. And so it's a very different, a dramatically different world than under Mao, but much more central control. We see this with what has happened with Jack Ma, who just recently reappeared. So one of the most successful business people in China, but then raising some questions and concerns about the regulatory structure and about the banking structure, and so so that was stopped. And I think there's a very clear signal that that comes with that, that no matter how successful you are in the private sector, no matter how wealthy you are in the private sector, it's very clear who is in control, and it is not the private sector. So I think that's an important element going forward, and we'll have to see how that plays out. Will that have an effect on private sector innovation, private sector growth? Because I think before this, there had been more on. I mean, one of the things that Deng Xiaoping had done is unleash that that private sector, that entrepreneurship, that those capitalist elements within the Chinese economy, and that led to just astonishing growth for the last 30 to 40 years.
Thank you so much. I was remiss. I want to remind you all that there's a chat function if you have questions. Richard, back to you. Do you think that the lesson of the ant affair is that there's no longer a distinction between a state-owned enterprise and a privately owned enterprise, that everything is subject to state control? Is that one of the lessons of Ant, or no?
I think, there are two elements of it. One is the rapid economic growth that took place over the last 30, 40 years in China. Was also one in which there were a lot of regulatory issues. Another term for it is, well, you went from a totally controlled economy to a semi-controlled economy, right? So you can think of it as, which created a lot of social and political dissent, right? And the state and the party reacted by reimposing some of these controls. I think it is quite obvious that in the Ant Financial is the issue that for long periods of time, I think that China tolerated these innovations. Right? It was highly innovative. These were financial innovations. And I think what has happened fairly recently is that there has been increasing concern. Partly is about the risk of these innovations, which are very, very substantial. And second, like
what do you see as the risks? What do you see as the risks?
Systemic risk that loans are being made by credit loans are being made by Ant Financial on a scale that is very, very large, right? And they are subject to any kind of regulatory oversight because they were considered as a IT company rather than as a financial company. So these are one issues, and obviously these step on the toes of the existing incumbent banking sectors. So there is also a contest of interest. So I think what has happened very recently is that finally the political debate at the highest echelons has basically decided, no, we have to take control of these financial companies. Right? Control meaning, you have to we do not know exactly what is that control. What is the regulatory structure? From news reports, we only know of that they want practices and to be instituted, but there's not much details as yet. So I would think, yes, there is more control, more regulation, perhaps but I wouldn't think in terms of whether, to begin with, the thing is, the development pathway for a highly controlled economy 50, 40 years ago towards a more open one will inevitably be quite cyclical. I don't think we could get there in one unidirection, so this is not unexpected, I would think. It's just that it might have been unexpected in a specific case like Ant Financial.
Can I add to that?
You know,
yes,
please.
can I add to that?
By the way, my screen has gone, so the only way I can get my screen back is to log off and on, which means I can't see chat. So if anyone can see chat, you might want to repeat that question, but please go ahead.
Yeah, so I agree with Richard's interpretation. So let me just make a few points. That the crackdown was on Ant Financial. It was not a crackdown on Alibaba. There was also no crackdown on Tencent as well. So it was specifically on Ant Financial. And I think that the way that you want to make sense of what you see in terms of Ant Financial is that I think it's one part of this broader campaign to deal with risks in the risk in the financial system. And this brings us back to what China did in 2008 and 2009. That is, in terms of, I think the way that you want to make sense of it is that you want to look at what China did in order to implement its fiscal stimulus. It did it in an unorthodox way. It did not spend money directly. What it did was that it basically gave license to local governments to create these off-balance sheet companies, which these companies that are known as local financing vehicles that would borrow money from the banks and then basically spend spend money on the direction of local governments for the purposes of the fiscal stimulus program. And then what happened was that when the fiscal stimulus program ended in 2010, the central government tried to close these local financing vehicles, but basically what happened was that the local governments, who now had these new companies under their control, they pushed back. So this was the beginning of the wave of quasi-financial liberalization, but it was quasi-financial liberalization only for certain types of firms. And then these type of institutions then basically grew and grew and grew. And then you start to see companies like the Hainan Group emerging, companies like the Anban Group emerging, companies which I'm going to call with very murky financial structures. And my sense of what happened was that the central government started to become very, very concerned about the financial risks. And one indication of this is that starting in 2016, it started to put in place local party secretaries with the explicit mandate to understand the underlying financial risks in their region that they were going to be appointed in, and to try to curb these risks. And I was telling Henny, when we spoke the other day, one of these local party secretaries was this gentleman called Zhang Xiaoliang, who was put in place as the local party secretary, and his mandate was to curb the financial risk. And he unfortunately was in charge of Wuhan in 2019 and until February of 2020, and the COVID crisis exploded under his watch. So he was promptly sacked. And going back to the question about Ant Financial, the way I make sense of the crackdown on Ant Financial is exactly what Richard said, that they were doing a tremendous amount of lending, so it was like it was essentially a bank, but it was being regulated like an IT company.
Yeah. So I want to segue, because we're already more than halfway through, and turn to the friction with the US. And, you know, one of the questions I want to start as we segue into that is one of the vulnerabilities of China. So on the one hand, you see this incredible innovation with companies like Alibaba and Ant. And, you know, China is way ahead of the US in digital payments, in commerce, as opposed to traditional retail. But one of the areas that we've seen China is incredibly vulnerable, and the US is taking advantage of that vulnerability, is that it is at least 10 years behind in areas like semiconductors. Why is this country, which spends so much on R&D and is so innovative, why do you think that there are areas, whether it's biotech or semiconductors, that they are still so far behind, and therefore the US does have so much leverage? Who wants to take that question?
I can say something about it. I think the simple answer is that command and control does not work well for innovation. I mean, I think it's the
yes.
Like a semiconductor is a great example. It's a sector where both the central government and hundreds of local governments, they have poured billions and billions of dollars into developing the semiconductor industry. And I think with maybe a few exceptions, it hasn't worked very well.
Well, let me just add on. It's something that is similar, and that is innovation is inherently risky, and risk and reward must be carefully, balanced, and you need the natural evolution of a ecological system, very market driven, to allow that to happen. A lot of individual initiative, company initiative. Now you put yourself in the context of China, which is just, over the 40 years, they're just reforming in bits and pieces. Think of it as deregulating the economies street by street, right? So there are many streets that's not that regulated. And therefore, the easiest solution for a lot of companies to churn up profit and boost sales is not to actually engage in things like doing semiconductors, which is a much more difficult. It's much easier to get people to write software, right?
That's a very good point.
So in a sense, right? Whereas the companies, because the economy is not fully deregulated, so you go along pathways where there's least resistance, and you do not want to go along pathways where it is where you were to develop a semiconductor industry, you need a lot more streets to be deregulated. You need universities, you need the financial system, a lot more things have to happen. Now they haven't, and that is the source of their vulnerability. Right? They just took semiconductor chips that they can buy on the market, right? That was easier. That was a cheaper solution, simpler, faster solution to do so.
So I want to ask about the geopolitics of US-China relationships. I was talking to Professor Hsieh a few days ago about CNOOC, which is one of the oil majors. And, the US is now saying CNOOC must not trade in New York because it's part of the military complex of China. Many people believe that one of Xi Jinping's agendas is to be, I'm the guy who brought Taiwan back into the fold. We've seen China be much more aggressive in the South China Sea. Are you worried, Randy, that there could be a miscalculation and the situation in the South China Sea and with Taiwan could escalate?
I think there are a lot of chances for potential friction there. And one of the challenges is that what the ideal, and what I also hope the Biden administration would focus on, is that there can be benefits from the economic relationship between the U.S. and China and the rest of the world. And I think sometimes that's lost by focusing on some of the military issues, and we start thinking about things in terms of a zero sum rather than a broadening pie. And so I think it would be very important to try to keep that in mind, to see where the benefits are of the relationship rather than focusing on just the potential flashpoints. And I think that's a challenge for on both sides to be able to think in those terms. And I hope the Biden administration will think in those ways, because I think if they do, that'll help to de-escalate some of those pressures. But if they think of it just as a fixed pie and I win, you lose, I think that then gets you into a much more difficult situation.
Yeah, I think Randy is absolutely correct. I mean, big power relations are obviously is not limited to just economics, but economics is a very important element of it. And many of the conflicts that has emerged in the U.S.-China geopolitical conflict, a very significant part of it really is economic, right? The South China Sea is at the end is a flashpoint issue in my view. It's the key would be how you could get into a situation where you could resolve a lot of economic conflicts. I think some of the TPP wasn't under Japan has made some progress. China has and Asian countries have set up RCEP, and I think promoting. I hope the United States would see positive elements in trying to construct a better free trade, resuscitate better free trade arrangements in the region that is fair to all parties and that can open up mutually beneficial exchanges. To a large extent, Asia is less impacted by COVID-19, in a sense, largely because it's at the stage of development where a lot of it is still very much manufacturing. China has actually moved beyond that compared to many Southeast Asian countries. So there's a lot of opportunity for manufacturing to actually move out of China into many parts of Southeast Asia, particularly Vietnam, but Vietnam is smaller than Indonesia. Right? So there's a lot of opportunity to generate economic, and I hope that these are the areas that the U.S. government policy could do some more sensible approach to promote a freer trade environment.
So can I say,
Sure, please go ahead.
Yeah, so I think I slightly disagree with what both Randy and Richard said. I don't think that at the end of the day that the conflict is really about economics. I do think that it's about something broader. That and the broader thing is that I think that the fundamental assumption behind the last 50 years of U.S. engagement with China is this idea of a political convergence, that if the U.S. engages with China in an economic sense, that it's going to unleash these forces that eventually China is going to look more similar politically, socially to the U.S. And I think that the main thing that has changed is that I think most observers have been disabused of this notion that in the last 5, 6, 8 years that it seems clear that's not true. That's not true. And then added on top of that, I think is then the question is if fundamentally the goal is that the people in China have a different vision of what their political system, of what their ideal political system is, then and what are the risks that political system poses to everybody else in the world. And on top of that, what additional risk does it pose if this political system becomes much stronger economically? And I do think that that is really at the root of the tension.
So I have just received a lot of questions. As I'm talking about U.S.-China friction, let me ask you, the audience wants to know whether under a Biden administration, will relations with China improve or deteriorate, do you think? And I'm going to add to that, do you think the emphasis will shift more to human rights, issues like Xinjiang, and away from full economic war?
So I think you were asking about whether exactly how the Biden administration is going to deal with these tensions, and I think
will relations improve or deteriorate?
So I think one of the key changes that has occurred over the last 4 years is the U.S. discussion and actually much of the world discussion with respect to China, and so I think there's much more nationalism around the world and much more concern about China. I think there's more nationalism within China also, and so. Sometimes we're not looking at the potential economic benefits and just looking at the conflicts. And so I think it's going to be very difficult for Biden to take a dramatically different approach. They may use different tools, and they may try to take a much more internationalist approach and reform international institutions and try to build coalitions. But I still think there's going to be a very tough relationship between the U.S. and China. I don't see that changing fundamentally, but I don't know what you guys think, Richard and Chang.
Well, let me just get back to, I think it's at the end of the day, basically each government will have to set what its goals. And if the goal is that you would hope that China would politically become more like the West, that will be a very, very remote and long-term goal. Right? It's not something that will happen very quickly. In fact, if you just look at Asia, there might be elections in many parts of Asia, but in many, still one party dominates quite significantly. So the political evolution is not going to be anything that will happen anytime very quickly. And that's what I would think. So the goals that a country like China or the United States have to set with respect to each other is that aiming for political change is very, very long shot.
This question is for Richard. I just wonder whether the U.S.-China trade and with the new president in the U.S., what is the future of Hong Kong? In the political environment changed rapidly in the last 2 years. As a young professional, where should of my future? Should it be the U.S., mainland China, or Hong Kong? What would be the future?
I'm not sure I can hear, but so I'm just looking at the Q&A and trying to see whether it's driven from the Q&A. I think the chances of political change in China as they impact the U.S.-China relations will be a very, very slow process, if at all, judging from the vantage point of today. The next question is whether there is scope for economic, whether we want to do economic decoupling or whether we want to still have partial engagement where the terms of those engagement might be mutually beneficial, level playing field. Those are areas I think there might be some progress. Surely, I think though, hopefully, they might not resolve. One thing is to explain why there is this U.S.-China geopolitical conflict at this point in time, which I would not disagree with Chang-Tai Hsieh, but how do you move forward from this, given the situation we are in? So I think in some areas of economic development, it still will be quite important, and every country has some leverage over the other.
I'm going to turn to Chang-Tai now. We were talking earlier in preparation for tonight. You make a very interesting point. Beijing's relative strength via all the provocations from the U.S. and increasingly hostile measures from the U.S. With the kind of lack of restraint that Beijing has shown with the rest of the world. Can you talk to us about, do you see, for example, Beijing's response to Australia's, support of looking into the origins of COVID with a sort of massive retaliation from Australia? What do you make of that? To what extent, is China being irrationally provocative, perhaps?
Yeah, I do think that is one of the biggest failures of Chinese policy in terms of its stance, the way that it deals with, let's just call it, the smaller countries of the world. And there's a narrative that's now emerging that China's policy is to engage with you economically, and once you've paid all the costs and your companies have paid all the costs in engaging with China, then that sets you up to be held up as a hostage and we've seen this. We've seen this occurring. It's not just Australia, but it goes back to Norway, to what happened to the poor Norwegians. What it was, maybe 8 years ago that it happened to Norway. It happened with the South Koreans maybe 4 or 5 years ago. It happened with the Canadians starting about 2 years ago, and it's now happening to the Australians. And my interpretation of this is that okay, so I think that there are two things that I think are tragic about this. One is that this is, I think, a very important part of what feeds the perceptions in the world, that it's not just that the Chinese want a different, that the goal is to have a different political system, but the goal is to have a different political system for everywhere else in the world. I don't think that that's true. I don't think that's true. But that is the one very natural conclusion that that people elsewhere in the world. And the second thing that I think is tragic is that I think that it does not really reflect the Chinese system. That I think that it just reflects the posturing of people in the foreign policy apparatus trying to signal their virtue to their masters in the Chinese Communist Party. So I think that so I don't think that it's an integral part of what the Chinese system is, and I think it serves them it serves them poorly. It's not in the long run interest of China, and it's really not what their goal is. I don't believe that the Chinese are after regime change in Australia or Canada or anywhere else.
Why do you think there's this mismatch then, Chang? So if it's not in their own interest, and it's certainly not in anybody's interest in the rest of the world, why is this happening?
Maybe I can just respond a bit based on my own understanding of Chinese history, right? Foreign policy was never an important part of Chinese administration and governance and policy decision making. China was pretty self-contained, right? All the problems they had throughout their history is civil war, right? Not external war. So foreign policy is a very underdeveloped part of it, and they don't even have a big say, right? Historically, they don't have a big say. It's a weaker. It's not like State Department in the United States, right? And it is in this sense, I would think that what Chang-Tai Hsieh has alluded to is very understandable. It's a weak and vulnerable part of the chain of command.
Yeah, and it's not just that, but if you look at the incentives of the Communist Party, like the best and the brightest people in the Communist Party, you're never going to go into the foreign policy you're never going to go into the foreign policy apparatus. Where you're going to go is that you're going to go into the local governments. That if you look at the path that Xi Jinping took, or all of the members of the Politburo Standing Committee, none of them had ever served in any branch of the foreign policy apparatus. So I do think that it's a weak part, and it's not just that; it is that they also attract, I'm going to say, the least capable people of the Chinese bureaucracy, and so part of what they're doing is that they are trying to signal to their bosses that that we really are virtuous and we are really standing up for the party. So I think that it's this tragic thing that is, and I think it does play a part in what we're seeing in terms of the trade war now. That it's a sphere of that China's goal is regime change in the rest of the world, and I just don't think that the Communist Party has any interest in that. But that's not what they're signaling.
So I'm going to cut you all off. We have one more minute, and I just want to squeeze in one more question from the audience, which is, how big is the risk posed by aging demographics in China?
I think it's a very important issue, and I think that the Chinese have not, or have really come to grips with that. A lot of the growth over the last 40 years was just this enormous migration of people from the inner parts of China to the coastal regions. And during that period, you could build any infrastructure project along the coast, and within a few years it'd be useful. You could build housing anywhere there because there's just such enormous migration. So basically, an enormous increase in the number of workers who are part of the formal economy, and ultimately, economic growth is the number of hours worked and the output per hour. And so China really needs to pivot to thinking about that output per hour, because you're not going to get the same kind of growth, and actually probably a contraction in the number of hours. And I don't think there's been enough focus on really thinking about how you develop that. And I think that's one of the big challenges going forward.
I think it's just very serious. And
I think we're out of time. So do you want to just very quickly add to what Randy's saying?
Yeah, I think it's a very serious problem, aging. The demographic dividend is gone. The resolution to this is to rely on more liberalization to many different sectors of the economy, hukou system and all that. You need to deregulate more in order to generate sufficient value-added propositions to overcome what is basically the disadvantages of an aging society. You need to reform your financial sector. You need more flexible savings options for and rewarding our savings options for the people of China.
So in other words, the government should send more students to UChicago to learn how to solve these problems. Randy, I'm turning it over to you. Thank you so much.
Thank you so much, Henny, and thanks also to my colleagues, Chang and Richard, one of our really wonderful graduates from University of Chicago. And for those of you who are on, we are going to now turn to an admission session to hear about the opportunities for you to be able to study at University of Chicago. And this is true both for our degree programs as well as our non-degree executive education programs. And so please hold on, and I'll turn it over to Flora and Jen, our key admissions people. Thanks so much, and great to be with you again.
Thank you, Randy.
Bye-bye.
Thanks. Great, thank you. So hello, everyone. Thank you so much for joining our event tonight, and hope you have enjoyed the very interesting discussions just now. I'm Jen, the Assistant Director of Recruitment and Admissions at Chicago Booth Executive MBA Asia Program, and I have my colleague Flora with me here today. So thank you also for staying behind, and I'm assuming that means you're interested in knowing more about our Executive MBA program. So we're very glad to have the opportunity to be here to answer any questions that you may have about our program. Please send in your questions via the Q&A function at the bottom of your screen, and we'll try to answer as many questions as possible in the coming 15 minutes. So while we wait for your questions, perhaps let me introduce our program to you first. You may already know how great the University of Chicago is and how top ranked in the world the Chicago Booth Executive MBA program is, and that we actually offer the Executive MBA program here in Hong Kong. And so one of the questions that I always get asked when people know about our program in Hong Kong is, how is the Asia program different from the one in the US? And my question to that is, in fact, there is no difference. So Chicago Booth, I believe, is the first business school that has three permanent campuses across the three continents. Of course, our headquarters is in Chicago, as you all know. The Asia campus is here in Hong Kong, and the European campus in London. So the Executive MBA program that we offered in our three campuses are what we call pure Chicago. So they're exactly the same MBA program with a general management focus, delivered by the same award-winning faculty from Chicago Booth, and you're awarded the same MBA degree after you successfully complete the program. So
thank you.
That's a very brief introduction.
Yeah, I think we have just received the first questions from the audience. So the first question is asking, what makes our Booth program different from the other programs in Asia? Would you mind to address it?
Sure. Thank you for the questions. So I guess what I mentioned just now, pure Chicago, I think that's the most unique and makes us different from the other programs. So the pure Chicago basically means the same program, same faculty, same degree. So all the courses in the program across the three campuses are taught only by Chicago Booth faculty. Our students will experience the same Chicago approach in Hong Kong or London as they would if they studied in Chicago. So pure Chicago is very unique. Another highlight, I think, is the Chicago approach. So actually, students learn to evaluate problems and opportunities through very fundamental disciplines that underlie how organizations function, how markets work, and how people make decisions. So the Chicago approach makes you think analytically and make decisions that are backed up by data. So data is very important to us. But it's not just about data. We also add in sociology and psychology principles during the negotiation. So as one of our alumni has shared with us earlier, the Chicago approach actually helped her set aside biases and listen more when she had to make decisions for her organization.
Right.
I hope that answered the question.
Yeah. So can you tell the audience a bit more about our students or applicant mix or profile?
Okay, it's very different every year. How many students apply, what do they, where do they come from, and so on. So I think Chicago booth attracts students from a very, very diverse background, usually in their upper middle to senior management level. The average age we see is usually around 37, and with around 13 to 14 years of experience normally. However, we also consider outstanding applicants with around 7 to 8 years of experience. So every year we have basically a wide range of students with a wide range of experience level. So the 2020 Asia class alone actually consists of 84 students representing 22 different nationalities. So this is just for the Asia cohort, with no one single culture that dominates the class. And they are also from a very wide range of backgrounds. So accounting and finance, as you would probably expect, also from management consulting, from manufacturing, biotech, from gaming industry, e-commerce, from the legal field, healthcare, pharmaceuticals, and so on. So we always attract a very diverse kind of students and applicants. And we do welcome diversity as well in our class.
Right. So we have just received another question. So this person is asking, is the program a right fit for me if I'm actually coming from I'm not coming from finance or accounting field?
Okay, sure. Yeah. So the EMBA has a focus on general management, and it can help you go to the next phase of your career. So if you don't come from finance and accounting, it doesn't mean you can't go up to general management, right? So you still have to become eventually building on your specialist experience. You will somehow become a generalist when you go up the career ladder or even start up your company and so on. So we do have students coming from a very diverse background, as I mentioned, like even gaming, manufacturing, healthcare, legal field, and so on. So if you would like to hear more from our alumni, we have a series of webinars coming up with different themes. So we always try to invite our alumni to share their experience. So maybe Flora can help us put the link on the chat box, and so you can have a look at the events that are coming up for our Asia program, and you can. You're very welcome to register and come and talk to us and our alumni as well.
Okay, so here's another question. So he said, would you grant GMAT or EA waiver if a candidate is actually a CFA charter holder?
Okay.
Do we have an admissions test waiver? Yeah.
Yeah, so we do require an admissions test for all our candidates. And as much as I'd like to, unfortunately, we normally cannot waive this requirement. We normally consider the executive assessment, but if you have a valid GMAT score, we will consider that as well. However, I would like to remind you, we do provide a lot of support. So you don't have to rush and go and sit the test before you consider applying. You can actually apply first and then work on your admissions test. So there are different steps in the application process, and I would strongly encourage you to write to us, and we will share more information with you. We have webinars that support you prepare for your EA, when's the best time to take the EA, and also we can share with you sample questions and how you can get the training and so on. So we have lots of support for you. We encourage you, if you're interested, to write to us, and we will work on a plan with you individually, because everybody is very different. And we will try to work with you individually to see what's the best plan for you, and we'll help you make a strong application, basically.
Okay, so another question. So during the program, if I need to relocate back to the States, or relocate to somewhere else, maybe London or Europe, what should I do? Is there any options for me?
Okay, yeah. So remember, our program is pure Chicago. So you'll be studying the same program, no matter whether you're based in Asia, Europe, or the US. So if you need to relocate back to the US, or maybe if your company is going to send you anywhere else, like maybe send you to Europe, you could put in the request. We do have students moving around from time to time, but of course it's subject to space availability. So you may need to wait sometimes, but our program office will work with, again, individual students to see what their request is, what the where they are at in the program, but it's usually not a problem. The beauty of the program is that it's only taught by Chicago Booth faculty, so you'll be studying the same thing wherever you're based.
Right, so this question is actually from Yoshi. He is asking if there is a conflict between my job schedule and the Booth program. Is there any flexible way to complete the EMBA program?
Okay, sure. Yeah, so again, pure Chicago. So if we try to give you the program schedule, the calendar in advance. So so you know exactly basically when you will be expected in class. And if it happens there's some emergency at work, which we always see in some of our students' cases, if there's a conflict, you cannot actually attend a certain class that's coming up, talk to our program office. Again, they will work with you individually to see how much you're going to miss. They will check with the professors as well. And so they will basically work with you to see how we can help you to complete the program on time. So if in case you have to miss a bigger part of the course or parts of the program that is very critical, then you may need to lengthen your study period a little bit. So it will be longer than 21 months, but we'll work with you individually to see how you can, or what's the best solution basically for you according to your needs and your schedule.
Okay, so we have received a few questions about the admissions requirements. Can you tell us a little bit more about this?
Okay, so requirements, I would encourage you to write to us because everybody is so different. It's best if you could share with us your CV or your LinkedIn profile. Just email us, and we will guide you through the process. We're very happy to give you advice according to your background and experience. We sometimes will tell you it's too early for you to apply. So maybe we can work harder on some aspects first. Or if we think, okay, you are very strong and we would welcome you to submit an application, we'll encourage you to do so. So we will conduct an initial review for you first before we work out a plan for you. So I would encourage you to write to us. And another important point is that I'd like to bring out is that you should still, when you're ready, and if you're not too sure whether you want to start this year or next, you should still try to apply as early as possible because admissions is on a rolling basis. So that's the only point that I want to point out. Yeah. But write to us.
Okay, so we also received some questions about the scholarship. Do we offer any scholarship to students?
Yep, we do have some scholarships. Again, write to us because different scholarships have different requirements and they have different focus. So write to us. We have some information on our website as well. So go to our website or write to us and we can send you the links to the scholarship webpage. We do have some on offer. Yeah.
Yeah, I think. Yeah, we have answered most of the questions. Is there any other questions that you would like to address at the end?
Well, I think there are a lot of good questions. I can see that, but unfortunately, time is running out for us. So what I would encourage you, if you're interested in knowing more about the program, the process, and anything else, just write to us. And we will get back to you as soon as possible. So hopefully, I can see Flora, who has shared our email address to you. So I think that's it for today, because I don't want to take up too much of your time. So don't forget, we have our next Economic Outlook London session. That is on Brexit, the US election, and economies of EMEA on February 12th. February 2nd. And it's at 9 p.m. Hong Kong time. So don't forget to register for that. And we will have other booth professors who will be sharing at the sessions as well. Thank you so much for your time today.
Thank you, everyone.
We'll see you your email in our inbox. Thank you. Thank you, Flora.
Thank you. Take care. Bye-bye.
Bye.